Yes. Well, one of my arguments, and I'm used to making pitches to large institutional investors my whole life as a former hedge fund manager, trying to gain an allocation from their massive portfolio to perhaps allocate a sub-advised portion of their funds to my hedge fund, for example. I will start off by saying this, Paul. I never argue for having 100% weight in any single asset. I'm a risk manager. So what is my weighting in digital assets right now? Well, firstly, I'm 100% weighted in Bitcoin within my digital asset portfolio. And why is that? Well, I own Bitcoin as a hedge against the fiat system. Right. And the only digital asset that hedges the fiat system is Bitcoin. Okay. So my weighting amongst other assets like real estate, like gold, like common stocks, like bonds, I'm 20% weighted in Bitcoin. I used to be a little bit higher, but the price of Bitcoin has fallen. I do trade my core position. That is my mantra for 30 years of managing risk. I have core positions, but I do trade them. I adjust them as the price goes up and down. That risk return has balanced itself a little better now. So 20% is my Bitcoin allocation. The wrong answer for any portfolio manager is to have 0% in Bitcoin. Anything above 0 is the right answer. And then you have to adjust your portfolio accordingly to your risk parameters, including your ability to sleep at night. There's lots of people who own a lot higher percentage of Bitcoin than me. I don't feel I have to, again, because of the asymmetry of the investment opportunity. Involvement in the digital asset community will actually unleash pent-up demand for professional managers to gain access to that risk silo. A degree of regulation provides them comfort. In the case of Mr. O'Leary, no comment. I do know his history. He is a fellow Canadian. Let's just say that, perhaps his due diligence was a little lacking, but he's not the only one. To be fair, it was a bit of a club deal. Oh, Ontario Teachers, Sequoia, Kevin O'Leary, Temasek,
they're all in there.
It's just, this is how the clubs work in the private equity world. What was really concerning, though, was placing your trust in a 30-year-old risk manager who you think has determined a new way to manage risk, when in fact, the only thing he did well was fraud. Okay. So you got to understand what it is to sit in a risk chair for a certain amount of time, how you really understand how markets work. Absolutely. I'd even go further. There could be some people that face criminal or prosecution. Now, let's be careful. Again, I'll go back to everyone's a genius in a bull market. Okay. So all of these tokens that, founders tokens that you can, the price goes up, you sell off your founders tokens. All of a sudden you crystallize your initial investment and you're playing with house money. After that, you're playing with house money. That was the VC game. This is why I'm only a Bitcoiner. Okay. Bitcoin has no CEO to grant founders tokens, which, there's a degree of centralization in all of these altcoins that allow these, I'll have to say it, some of these charades or even Ponzi schemes to succeed. Bitcoin has no centralization. It's purely decentralized. In my opinion, it's the only pure use for a blockchain, but I don't want to go there right now. It's just a difference between centralization and the ability to manipulate versus decentralization, i.e. Bitcoin. I actually think it would promote the adoption of Bitcoin, because what is a digital dollar? Nothing more than digital fiat with surveillance. That is the key. Okay. So it doesn't make it any more scarce. A digital dollar is just digital fiat. The money printer creates these because it has to solve the debt Ponzi that is called the US dollar debt spiral. But that aside, digital fiat is basically a centralized, and that's key because it's a centralized currency with surveillance. Oh, Mr. Foss, I see you spent your money at a restaurant close to a rally that we don't agree that you should be able to participate in that rally for, freedom. So therefore, we're going to censor you. We're going to restrict your ability to transact in this centralized digital currency. More concerning for me, Paul, is a centralized digital currency.
We'll see what happens.
That's right.
So it is going to happen, and those are kind of things. Here's my thinking is that when I see digital dollar really lining up now, obviously there could be a catalyst. Maybe FTX is it. Maybe it's not. We don't know yet. But the real point is when and if the government does make that decision to truly go all in on this, what is the likelihood of them putting pressure on the Bitcoin market to either, one, start to somehow restrict it in terms of acquisition and usage, or put so much pressure on the public that they almost have to back away from it and it goes into a black market kind of scenario? Do you think that has any risk?
Oh, yes. You always have to look at both sides of the risk spectrum. Now, I will throw out that there are a number of very smart senators like Cynthia Lummis who are advocates of Bitcoin on that side. But right now, you'd have to admit that most senators want to be able to control the public. That is the government mantra. But at the end of the day, here is what I believe will happen. You're Peter Schiff, okay? You haven't done the math. Shifty Pete actually understands that he's mistaken. He's a horrible risk manager. He is an absolutely horrible risk manager. If he had bought 1% of his portfolio in Bitcoin when he was first introduced to it, he would have been the best performing hard asset manager, i.e. including gold and Bitcoin, in the history of hard asset managers. But he is not a good risk manager. And all you have to hear is Shifty Pete in the background. Blah, blah, blah. I told you it would go down from 70,000. Oh yeah, Mr. Schiff, you also told us it wasn't worth $10, okay? So you can't suck and blow. You cannot suck and blow. You have to manage risk according to all the information that's available. Do I need the market to give me only 0.5% chance of being right? No, you got to dollar cost average into your insurance policy. I'll talk to you in 20 years. Everybody's the world's greatest trader. Fact is, you got to look at risk return. Look at it, lower your time preference. If you have 100% of your portfolio in Bitcoin, then you're probably worried about this. But if you have a proper portfolio allocation where over time you can add to it when it is cheap and peel some off when it gets a higher price, that's how you trade a risk asset, okay? And Bitcoin is the most beautiful asymmetric opportunity I have ever seen. Bar none, full stop. Why am I going to worry if it's going to trade at 16,000, 20,000, or 12,000? You guys are overthinking it, okay? Because when it trades at 2 million, if and when it trades at 2 million in today's dollars, this is what I need people to understand. This is in today's dollars. You guys are going to look back and you're going to say, man, was I ever a knucklehead trying to fine tune or thread the needle as to what the right price to get involved in Bitcoin?